Soybean swing is a strategy that takes trades at the beginning of each day. It then exits at the first profitable open or a stop loss value. In 2020, we've updated this strategy to use a $400 day trade stop loss, intraday, and $1,000 at night. We changed the session from a custom session to the 24-hour session, so it is still managed at night. The old version did not manage the strategy at night, so it could have a very large stop loss past the original stop loss. Soybeans is closed for several hours a day, unlike the stock indexes. You see it closes about 1:20, and then it reopens about 7 o'clock, and that is Central Time. And this is the latest performance summary through January the 18th. You see the results here. We're going to go over an old version, the version that we just transitioned from, and this is the most recent version, kind of sideways. I'm going to show you why in a minute. Actually, I'm going to show you now. Soybeans, this is a chart of soybeans weekly since 2007. Let's go back to soybeans and take a look at the strategy in the equity curve. Really amazing performance from around 2007 until about 2016, 2017. Kind of starts to flatten out, and look what happens to the average weekly range right here. It peaks in 2016 and it really drops off. So from 2007 to 2014, higher average daily ranges, lots of nice swings on the weekly chart, swings up until this point until about 2017, and then it's just a pretty dead downtrend. Not as many swings on the weekly chart, very dead downtrend, and then now we have a straight up market, and the average weekly ranges are increasing to a level that we like. We welcome two-sided price action, and so this is in January of 2021 that we're talking about this. Let's look at the older version. Here is the old version that we transitioned from that uses a custom session. It does not use stop losses at night. Here are the results of that strategy. Not a lot of difference. It is instead of 68,000, it's 70,000, but the drawdown is 4,000 instead of 2,500. The largest losing trade is 2,087.50. Let's look at the largest losing trade here. It's 1,075. So much better performance. We have that overnight stop loss, 17.22 right here, and we get 27.45.49 there. And so a much bigger net profit as a percentage of drawdown. Now the thing that I like most about this strategy is it works really well back to 1984. And so I have this latest performance summary, and we only see data back to 1991. TradeStation used to provide us with data back to 1984. I still have an old performance summary for that. So we're going to take a look at that in a minute, but back to 1991 is what we see now. And these are the results. These results on all these performance summaries are without slippage and commission. But $107 average trade profit from 1991 to 2006, mainly on pit traded markets, and then from August the 1st, 2006, we switch over to the electronic market. And you can see how narrow the data starts to get. This market starts to transition to electronic data mainly instead of pit data. And here is the equity curve at S.P is pit traded, so it went from pit traded markets to electronic markets, and really nice results. And so this strategy tests back to 1984, so I really like this strategy. So just because we haven't done much in the last few years because of the narrow ranges in soybeans doesn't mean that we want to eliminate this strategy. I think that soybeans trading will pick up again, and I really like it. It's in our portfolios. And so that's the benefit of diversity. You can keep a strategy that's gone sideways to down for several years when you're trading multiple strategies. And let's look at the old performance summary. So here's the report back to 1984 on the pit session. August the 17th, 1984 is the amount of data we had in the past. Now it only goes to 1981. So August the 17th, 1984 to July the 31st, 2006. And you see that how nice this performance summary is. Kind of went sideways there at the end as the transition of electronic markets were actually happening at that time. 74.24 average trade profit, 531.25 max drawdown 120,000 112.50. So I love this strategy for this long back test and anticipate better price action. This is the latest once again in Soybeans Swing. It's in the portfolios, including the 50K portfolio. And so this strategy is one that I really like going forward for soybeans as the price action picks up.